peace negotiations are definitely adding some shine to metals. Look at gold, silver, and platinum. We've got gold up $133, or about 3%. Silver up 5.6%, 4% gain there. Sorry, 5.6% and a $4 gain to about $77. Platinum having a great day, up 5%. Now, we're not talking, when it comes to gold, about a safe haven trade here. The metals have gotten clobbered since the war began, which, interestingly enough, is a bit counterintuitive. De-escalation intentions would normally remove gold's safe haven premium, but this is way more about the prospect that if the war ends, oil falls back, hopefully, to its pre-war price of around $67 a barrel, and inflation cools. That is a big if, but investors are buying first and asking questions later. Is that a smart plan? Let's get right to the floor show. Joining me now, Hennion Walsh Asset Management President and CIO Kevin Mahn. Really solid rally here across the board. I was just looking at Bitcoin, which is slightly down at the moment, but it popped above 81,000 earlier today. It's still there. You've got Disney having a great session on great earnings. So much to talk about. Yeah,
I mean, there's an age-old adage on Wall Street that says to sell in May and go away. I believe that stay in May and let AI lead the way is more appropriate for this year.
So it's all about AI.
It's all about AI. Despite the war in Iran, despite rising oil prices, despite lingering inflation fears, AI revolution continues. And as we learned from Q1's earnings report, these hyperscalers continue to spend billions of dollars to build out their AI infrastructure.
How can you say that the peace process, which is still touch and go, and we really don't know just yet about this one-page proposal and how the Iranians are going to react to it. And we've seen this movie before where there was hope and then it's dashed.
Oh, yeah.
But how can you say that today that is not an issue, especially when you look at West Texas Intermediate now well below $100 a barrel?
I think the prospects for resolution we're getting closer and closer to, and once we do see some tankers move through the Strait of Hormuz, oil prices ease, but not back down to $67 overnight. That could take months to get to. So inflationary pressures may stay for some point in time, but gas prices should start to ebb down, and that changes consumer sentiment because 70% of our economic growth comes from consumer spending. When consumers have more to spend, the economy grows.
We right now are seeing a huge rally on sort of buy on the rumor.
Yes.
We know what supposedly follows, the old Wall Street adage, sell on the news.
Yes.
What are some sell on the news stocks if and when there is a signed peace proposal on both sides?
Yes.
What do you say get rid of at the moment?
I think you have to look at the energy sector, Liz. It's up 33% year to date, the top performing sector in the S&P 500. But if we do get a resolution in Iran, if tankers start flowing again, if oil prices start to come down, some of those energy names are not going to perform as well as other names.
Look at the XLE, the Spider Energy here. It's down over the past week just 1.5% on one, and here we go, one day down 4 1/3%.
It's a very crowded trade right now. But then I look at some of the big integrated players like a Chevron, like an ExxonMobil, that are going to be involved in the reconstruction efforts, not only in Iran, but also in Venezuela. They're going to have staying power. Some of those other names that have just been riding this energy tailwind, they're more susceptible to downside.
I was just looking at China stocks.
Yes.
Bilibili, Alibaba, JD, they are rallying big time. Now, the Iranian foreign minister today was in China, and China apparently put out a statement saying that they are encouraging the peace process to move forward.
Now, do we believe that? I'm not sure. But I do know China's in trouble. Not only do they need our advanced chips, but they also now need our oil. So that's going to bring them back to the trade negotiation table with President Trump. Short term, that could be seen as a big question mark. Long term, that could be a net positive for the U.S. and perhaps making some of those Chinese investments more attractive to U.S. investors.
I would be remiss if I didn't focus a bit more deeply on Disney, up 7% right now, on a very positive earnings report with the brand new CEO. And he came out swinging, came out with a big, long earnings note. And I think that it really speaks volumes that it was time for Bob Iger to hand the reins over to a fresh person and fresh eyes.
They needed a change in leadership. They don't just need to focus on the park experience. They also have to look at ESPN as the sports news brand. I think combined, Disney has a lot more upside from here, and I'm really anxious to see what their plans are going forward.
Disney, at the moment, is at the very top of the Dow Jones Industrials. One quick thing. We're waiting on the jobs report from the Labor Department today. We got the ADP private jobs report.
Yes.
It beat looked much better than expected, 109,000 versus the expectation of 99,000 jobs built. So this means what for the Fed? If we're looking at a pretty stable jobs market.
If we're looking at a stable jobs market, which they're forecasting, they believe unemployment ends this year at 4.4%. We're at 4.3% right now. If inflationary pressures moderate, don't come down significantly, but certainly don't rise, and if GDP growth stays between 2 and 2.5%, I think the Fed stays on pause for the considerable future.
Do you see a beat on Friday for the April jobs report?
I certainly do believe if it follows suit with what we saw today, we could see a beat. If we see a significant beat, that could actually start to change the calculation of what the Fed may or may not do.
You got Treasury yields coming down here, the 10-year down 7 basis points to 4.35%. I found that pretty interesting considering it closed at 4.416 yesterday.
Yeah, yields are going to start coming down if people believe that inflationary pressures are going to come down. Plus, Kevin Walsh is going to be the chair of the Fed soon, and maybe he's a little bit more dovish than the Chair Powell. We'll
That's
see.
not going to help the 30-year fixed. I don't know. Whatever
no time
happens.
soon. The Fed only influences really the short end of the curve, not the long end of the curve, unless they use their balance sheet.
The 30-year fixed mortgage rate hit a 1-month high today.
Yeah, and that leads into the affordability crisis for
would-be
homeowners.
buyers. Exactly. Good to see you, Kevin.
You as well, Liz.
Thank you so much.